Daniela Cambone, and welcome back to StansberryInvestor.com. Before we start today's segment, I want to bring you up to speed on a really cool event happening at Stansberry Research, because on October 20th, you're going to meet a man who will perhaps change the way you look at money forever. His name is Matt McCall, and he's Stansberry Research's newest analyst. I've been following Matt's career for years, and I can tell you he has a track record that's quite impressive. He has more than 1,000% winners, over 40 of them, than likely any other analyst in America over the last decade. He even recommended Bitcoin back in 2014 before it soared 100 times in value. And on October 20th, he's revealing a huge prediction nobody else is talking about right now, as well as the name of a tiny company he thinks could go down as Stansberry's most successful stock market recommendation ever. Best of all, he's sharing all of this with you 100% free. So for more details and to sign up for this important event, I know I'll be tuning in to catch that ticker symbol he'll be announcing. You simply have to go to mattprediction.com. Again, it's mattprediction.com. All right, let's get to today's interview now. The IMF is warning on inflation, saying the Fed and others should be prepared to tighten policy. Here to talk about this with me today is E.B. Tucker, author of Why Gold, Why Now? E.B., welcome back to the show.
Thanks for having me.
So as you know, last time you were on, we had an in-depth discussion about the Fed, and you said, no way will the Fed ever be able to tighten. Have you changed your stance since?
Well, so far, so good, right? I mean, they keep saying we plan on doing it. Hopefully we'll do it. Maybe next year we'll do it. We have a bunch of dots on a piece of paper that say we'll do it sometime, but still not going to do it. So, I mean, this is like, you know, I'm definitely going to quit using drugs next week or something. I mean, next month or next year. I definitely want to do it, but I can't do it right now. This is what it feels like to me.
Okay, so, but even despite the warning from the IMF, so you think the Fed's just going to be like, okay, who cares IMF? We'll do our own thing.
I mean, how many times has the IMF warned you about something that actually happened? I mean, zero. So
True.
This is everyone waits around at 8:30 in the morning to hear the magic words from Jerome when the Fed talks. And it's funny because I'm on a Bloomberg, you can see behind me, and I'm watching everything. And 1 millisecond after the release comes out, everything trades, which I don't know how anyone reads. I'm a pretty fast reader, but I don't read that fast. And every single time, these people are wrong. And so I've never seen a group of people that has more credibility and more respect, and then the whole world stops to hear them speak. And they've never once warned you about something that's happening. I mean, this whole inflation thing, we talked about this earlier this year. So you look at a chart of natural gas, 450% up. Iron ore was screaming higher in May. It's cooled off a little bit. Now it's going up again. Cotton, all-time high. There's all these problems. And look what's happening. I mean, Europe is now about to freeze. So they're begging the Russians for more gas. Okay. And the gas price is up really high. So, I mean, if you want to play this smart, you buy Gazprom or a Russian gas producer, because they have a pipe running into Europe that supplies the gas. They can turn it off, turn it on, whatever they want. I mean, that's the real world.
It's funny because I want to talk about energy and how you could play that later. But first, just sticking to inflation and the Fed. Okay, so we get it. We know we know what the narrative is now. Inflation not transitory. So if they're not going to raise rates, how do they fight inflation, or do they not want to fight it? What do you think is the real story?
Well, I mean, I love pretending to fight something that you're not really fighting, right? I mean, I'm going to stand up to this foe, that I've created, and I'm going to protect you. But really, I'm just watching things run out the back of the store while I'm acting like I'm protecting the front of the store. Okay, so why would someone do this? Is it nefarious? No, it's not at all nefarious. But think about it. You've got this gigantic debt pile for 20 years. You blew up this debt balloon so that the system would keep working. I mean, I'm in Florida. So in Florida, real estate is what people think is like a serious, a major part of the economy. It's like something people do their whole life and they never seem to lose. But real estate generates a lot of money in the local economy because selling a house, you pay a lazy realtor, a huge amount of money, and there's title insurance, which is really a crazy concept. And surveyors and home inspectors that tell you all the broken outlets in the house and everything. So these people all thrive in a system where the value of the house is continually rising and it makes people feel rich. And so what you've done is you've inflated this thing so that you can have a growing economy for all these years. But now you have this humongous bubble that if it runs anything sharp, it's going to have a huge problem. And so one way to make the bubble less intense is to have a scenario where inflation's running hotter than you say. So, I mean, if you're experiencing 6 or 7% inflation, but you're earning half of 1% on a stable, realistic investment, like a savings account or something that, you're giving the bank your money so that they can loan it out, right? That's a pretty common thing to do. So what's happening is you're losing 5.5%, but you're not going to notice for a couple of years because you're watching Jerome, and Jerome's telling you there's no problem. Don't worry about anything. There's no inflation. Food doesn't count, okay? But food does count. Go to Whole Foods and buy. When I used to write a newsletter, I did this. I went to Whole Foods, I bought a meal for a family of 4, and then I went to Walmart and bought the same meal for a family of 4, much lower quality food, and showed people the difference. Like the cost of an apple or the cost of a scientifically created apple is very different. So people can see with their own eyes if they pick up their face away from the phone. I mean, if you notice, everyone walks around staring at the phone. I mean, they'll be at a tourist site or something with their family, and all 4 family members are looking at the phone. It's bizarre to me.
So
but my point is, think about it. Look at the things that you're paying for in your life, and every shop that you go to says costs are going up. Can't find any labor. Got to pay people more. Going to have to raise prices. I don't know what I'm going to do. So this is going on in the collective society, and so nobody's going to protect you. That's the sad thing in life, is that nobody's looking out for you.
No one's going to protect you, just yourself. So what are the sectors that you're liking today, E.B. Tucker? So
the subtitle of the book is The War Against Your Wealth and How to Win It. Everybody misses that. They're like, what is this, a book about gold? It's not really about gold. Because gold is just one thing. I mean, it's one tiny thing. But what people need to see is that you have this kind of erosion to all this money that you've saved up because you're trying to have a better life. And eventually you don't want to go to work in the cube every day. You want to do something that you want to do. You don't want to go and live this life anymore. And so that's what people need to see is kind of under attack. And a lot of people have money in stocks right now, but the stock market is not doing that great. I mean, you see the index is doing okay, right? Carried by a couple of big companies, but the actual individual stocks are not doing that great. And so when you look at this scenario, you see that we're stalling out right now. And then something drastic has got to happen. And so now's the time where you want some safety. And safety has been out of favor. So everybody says, oh, I'm a contrarian, but really most people are not. They're itchy. That what happens is they're always moving. And so I bought this stock Tuesday and it's not done anything, and I got to get rid of it. I mean, that's the way people think, because believe me, I have a company where I've put most of my life savings that I'm very happy with, that owns, decades of gold royalty production in the ground, right, with Metalla. And I see the emails that come into the info line of people, what's wrong with this company? And you think, you guys, I mean, you got 40, 50 years of future gold production that somebody else is going to do all the work. And listen to these mining companies. All the costs are going up, but we already bought the royalty. So there's no more cost. That's it. So anyway, what I've done is I've bought royalties of all types. I mean, nickel, copper, and now, I mean, I'm not ready to say yet, but we're doing more in the green energy field, at some point too. I mean, so this is where I think this is what I want to own right now.
I'm happy you brought up royalties. Royalties pay dividends, as we know. I had a Titan on in the mining sector before you, and it will air after this interview, probably, EB. But he said something interesting. He said, part of the reason the mining sector is suffering right now, I'm talking precious metals mining, is there's this, mining companies are looking at, okay, should we be focused on paying dividends or reserves? And most of them now are choosing dividends to make the marketplace happy. And he would argue this is a wrong focus, and this is part of the problem at the root of miners. Would you agree?
Well, he's a little late. I mean, you're right about the fact that they are starting to resemble utility stocks. I mean, some of these things have got 50 to 75% higher dividend than the S&P. I mean, it's kind of crazy, and largely they're debt free. So I mean, you have mining stocks that have negative net debt. What that means is they not only have no debt, they have cash. So and you look at the average mainstream company or tech company, and there's no profit and tons of debt, and you really, if you think about it, what do you even own? I mean, you hope you're going to be able to grow more eyeballs of those people with the messed up vertebrae from staring at the phone. You're going to have an army of those people. That's all you got, right? So he's largely right, but it's too late, because what happened was 15 years ago or so, these guys took this money. I'm not saying this guy, I'm sure he's not one of these, but a lot of the guys in this industry took this money and they wasted it. I mean, they bought projects and they paid too much money for them, and they went to bizarre places in the world, that ended up having geopolitical problems, and people cut off the money, like a 30-year-old kid that lives with his parents. They said no more, right? So the industry starved for cash, and it did not invest in new supplies. And so as it kept producing, the future supplies went down, down, down. So right now what's happening is the production of gold is going down. Mm-hmm. There's been no investment in finding new gold. Like Pierre Lassonde always says, they used to find a 50 million ounce gold deposit every decade. They haven't found one in nearly 2 decades. And I know from being in the royalty business that the reason why we went out and bought 70 royalties as fast as we could is because there are no good projects to speak of to develop.
So to that point, right, if we're not going out, if we're not finding new gold deposits, if the supplies are not, are shrinking, and coupled with the economic landscape, I'm going to bring it back to your book, even though it's not just about gold, but why isn't gold moving? You had a very bullish forecast, I could say, for year end. Have you since changed it?
Yeah, I mean, it's out the window. The gold price is stuck at 1750. It just like a magnet, it can't move. I mean, I'm even looking ahead. It gyrates up to 1770 and then right back to 1750. It's stuck. And so what people don't like about that is they say, well, why would I want to own 30 years of gold royalties if gold isn't going to go up 50% in the next 3 months? I mean, this is boring. Like, I can buy a picture online of a rock with laser eyes for $1,000, and I can sell it to somebody for $1 million next week. So why would I want to buy 30 or 40 years of future gold production? And that's the type of question that people tend to ask before they've been through any economic cycle. I mean, this will end, and it will end badly for people that have bought insane things with their money, hoping they would sell them to somebody more insane. That's what tends to happen in this type of environment.
Let's play out the scenario then. Okay, on that note, if you're thinking the Fed will not be able to raise interest rates, a lot of people argue once they raise those rates, that's when the market would go kapoof. So are you not thinking that the market will have a serious correction if those interest rate hikes won't happen?
Well, I think the market will go up nominally. I mean, I think you can gyrate around and have a small gain, but remember, you have to take out that real inflation number and ask yourself, are you really keeping pace? If you're up, down all year and you finish up 10% or something with the market and inflation's 6%, did you really make any money? I mean, if you take into account the risk, you did not really make any money. So that's what's coming. And this has happened in the past before. Everybody forgets about periods, like in the late 60s, early 70s, you were stuck for years. But if you're in the market, or if you look at a chart of the week by week action in the Dow, it could be very confusing because you would run up for a bit and then you would come down and you would kind of not go anywhere. And so what's going to happen is that at some point, people are going to say, wait a second, I bought this picture of a rock with the laser eyes, hoping I would sell it. And now no one wants to buy it. Now I'm panicking. I've got to sell this. Or I bought this company that's going to go out and find all these people that are going to play a game or something in the metaverse, and they're going to be trading, digital swords with each other. And my friend told me his kid has a digital beach house in the metaverse. I'm not really sure what that is, but my point is I can't go stay in it, right? So this is very hot right now. At some point, people say, wait a second, I got to get rid of this stuff. I bought all this stuff that I got to sell it to somebody else, and I can't find somebody else to sell it to, and I don't really want it. And this happens from stocks all the way down the line. All the things that are hot during a boom, all of a sudden people have to get rid of them at the same time. That's the problem.
Yeah, I have no time for metaverse, let alone Squid Game. So I'll just put that aside. I think a lot of gold investors, as you know, Evie, are just so frustrated because, like, not even against the jobs numbers that gold move, and we know, okay, it's not going to move on all those data points. We know there's a lot that goes into the gold price. It's just frustrating that given all the economic context, gold should be much higher. So the question is, in this inflationary environment, we saw how people flocked to gold in the 1970s. So are they choosing Bitcoin?
No, I don't think people know there's inflation yet. That's what we're saying is the problem, is that the Bitcoin market cap is, you got to be careful because you get a lot of hate mail, but I think it's like 1.2 billion, something like that, right? I mean, sorry, a trillion, just over a trillion. Add in all the other cryptos, maybe you got 2 trillion. Gold's 12 trillion. So I don't think people are saying, let me buy this Bitcoin because there's inflation. What people are saying is, what inflation? I read the news that says there's no inflation. I mean, they're not buying crypto. They're buying.
Feel it. You don't think, but look, you just said your Whole Foods point. Like, you go to the grocery store, you feel it. How are people not feeling it? Or they're not labeling it inflation.
I have no idea, because I'm in line with them. I'm thinking, what do you do for a living? Because $300 or $400 per trip it's like, I mean, I can handle it, but I mean, it's not exactly a small amount of money. And you notice it because the butcher tells you, the fish guy tells you. I mean, everybody tells you that the prices are going up, but you don't call it inflation. It's unbelievable. And then you go eat somewhere and the staff wants an extra donation because this and this, and can't find anyone, and the prices are going up, and the wine guy said the wine's going up, but we're not going to call that inflation. But this is what I want people to see, though, is that we were talking about the crypto stuff. So there's a reason to buy crypto, but it's not, it's people I hear people all the time are asking me about crypto. So not once is someone saying, should I buy this crypto coin to protect myself from inflation? It's always, should I buy this crypto coin before it goes sky high in price and changes my life? That's not why people buy gold. So the gold people are, and just, you made a comment about gold being frustrating. Let me just tell you that I was in Denver Gold. Okay, I was there. And it reminded me of like Kim Jong-un's birthday party, where you look around and there's no one, but you got to act like in the camera. No, it's great. There was nobody there. So Mark Bristow, who is a titan, in my opinion, is a guy that's going to go down years from now as being a legendary operational manager of a business. Ask anybody that works at Barrick will tell you that. And there's a half dozen people sitting there, and I'm thinking, this guy he's a titan. Half a dozen is the best you can do. So how much lower can it go? Okay, but the question is, who's going to buy? That's the question, because there's not one person that's out there in the metaverse that says, I got to get an ounce of gold, I got to get a Krugerrand. Nobody's saying that, and I don't think they're going to say that until they have a problem selling a picture of a rock with a laser eye and nobody wants to buy it. That's when the
coming though. I mean, at least from, and just to the point, maybe they need to move the Denver Gold Forum back to Denver, not Colorado Springs. But anyhow, to get more people. Side note. But in terms of coins, what I'm hearing from suppliers, that silver sourcing may become a problem again. Have you heard anything about that?
Yeah, absolutely. There's 3 dealers that I trade with that I list their phone numbers in the book, in the name of the owners, if people want to call them. But But I talk to these guys all the time, and there's lots of problems. I mean, there's just not that much physical metal. There's just not. I mean, and everybody looks at this price, but it's a futures market price. It's not the actual price of the ounce of gold. I mean, you're going to pay a huge premium to get an ounce of gold, a respectable ounce of gold, you know, like a nice coin.
Let's move beyond precious metals now. Let's talk energy. You mentioned Europe, the crisis in Europe, how they're going to have to be perhaps counting on Russia this winter to get them through the winter and heat their homes. We see the coal shortage in China now hitting India. Let's talk this energy crisis that seems to be affecting the world.
Yeah, well, you had 5 or 6 years where you got everybody kind of whipped up into a frenzy about carbon. I mean, I was reading on Bloomberg this weekend, 70% of people in the world that they surveyed think that carbon emissions are going to personally affect their life. So it's become a black eye investment that you could put with vices and cigarettes and all these things to buy an energy stock in the last kind of half decade. And so what that means is there's been a lack of investment in that business. And now all of a sudden you have rising demand and everybody needs energy to do stuff, because with Nova royalty, we have copper and nickel royalties, which I'm very optimistic on, because you need just so many pounds of copper that you can't even fathom the amount, and they don't even know how to produce it to hook up the green energy movement, right? It's not possible without this, and you need nickel for the batteries to store the energy, okay? And so that's not in place yet. And so to get that done, you need lots of hydrocarbon energy, you know, to make that transition. And so you've starved that business. And so now oil's over $80. It's probably going to go to $100. So if you ask what's oil going to look like in 20 years, the demand is probably going to be less than it is today. But what's oil going to look like in 20 months? Still a major part of what we do. So, I mean, you know, personally, I bought some energy stocks. I bought some for my kids last year during the pandemic. I mean, they got really cheap, like unbelievably cheap. And now they're paying huge dividends and going up a lot. But this is what people don't understand. Price of gas is not coming down. Price of natural gas to heat your home is not coming down. The price of oil is not coming down, period. It's going higher, much higher.
So, you know, we're always told follow the money. Is carbon credits going to be the new hot sector then, EB?
I think so. And I think there's enthusiasm. We're talking about we can't get anybody to buy gold. You look over on the carbon credit side of the world, which I don't want to say this too fast, but a lot of people are still trying to figure out what a carbon credit is.
Yeah.
But basically it's the right to emit carbon into the air. And what happens is someone that's capturing carbon sells the right to someone that's emitting carbon. That's called a carbon credit. So that's becoming a real marketplace that's very viable, that there's projects all around the world. And that's a business that I think is somewhat attached to the green energy movement. It's a part of it.
Definitely one to watch. Final thoughts, EB. You said the gold forecast out the window for this year. So you think we just end the year around this price, or?
Well, I think you just give up trying to say it, because you have the most logical thing happens, and then you look at the price and it's stuck. But let's leave people with this. I mean, what you got to do is you got to realize, Richard Russell wrote this great essay years ago about the difference between a rich person and then a person that just has some money. There's a big difference. The rich person has patience. The rich person is looking for value and opportunities to buy something that's a little bit out of favor, that's coming into favor. And try to think about that. The person that just has some money is shifting around from here to there. They're generating a lot of losses, and ultimately they lose that money. So, I mean, try to think like a wealthy person, because if you're paying attention to this video now, you're on the way to doing that. And so start thinking and acting like that person. And just know that when we started Metallo Royalty, ticker symbol MTA, we wanted 30, 40 years of gold production into the future with no exposure to inflation. And so what happens is you go straight up like this. As the gold price goes up, your income balloons. And that's what we were thinking. It's important to know that. So,
well, like you said, we live in a world of, looking down, instant gratification. I want my returns fast, quick. What's going to get me there?
Well, it doesn't. Yeah. Well, what you don't want to do is follow all those people that are staring. You ever walk down the street, people run right into you, and they're staring at the phone. Okay, so that's what these investors are doing that are shifting around. I got to sell this now. I got to go here. I got to go here. You're going to lose everything. Believe me. This is not how you make money in life. This is what happens when you're speculating. It's high turnover. I mean, I'm speaking from experience. I was around for the 2000, bubble and down. I was fairly young, but I was not, I was old enough to have a brokerage account, and I was playing in this. And I distinctly remember everybody was giving you a stock tip. You were buying something what does a company do? I don't know, but it's going to be big. This was the type of attitude that we had. And most of this ended in tears. And so I'm not saying this is an exact carbon copy, but what I'm saying is you got to buy things when it comes to your investment dollars that you like where this is headed. You got to say, like, I like where this is going. And that's what we did with Metallo. That's what we did with Nova Royalty, with copper and nickel. That trades in the US, NOBRF. And that's what we're going to do in more areas of the green energy space, because these are trillion-dollar trends that are just getting started.
Keep us posted.
Really big. Yeah.
Keep us posted. I want my viewers to know firsthand from you, EB. Thank you so much. You know what I can always count on? A great conversation with you. So thank you. Thank you, EB. Author, Why Gold? Why Now?
Which is available in hardback now, by the way. Amazon just started printing it in
time
hardback,
for the holidays. Thank you, EB.
Perfect gift. Yeah.
And thank you all for watching. We'll have much more for you, so be sure to stay tuned to stansberryinvestor.com. And for premier content you can't get anywhere else, sign up, DanielaCambone.com. That's it for me. Thanks for watching.